Welcome back to Rockstock Channel. It is Monday, October 6th, and Matt, Rodney, and I are joined today with Gabriel Rubacha, the CEO of NOA Lithium Brines, to discuss NOAA's just released preliminary economic assessment for its flagship Rio Grande project. I've known Gabriel for more than 7 years, since he was on the board of Lithium Americas and held an operating role as CEO of the Minera XR JV with Ganfeng. Minera XR, 45% owned by what is now called Lithium Argentina, is now near nameplate 40,000 tons production at their Cachari-Olaroz salar in Argentina. RK Equity was a strategic advisor to and an investor in Lithium Americas from its early days. A quick shout out to flag our upcoming lithium bull entitled Rational Exuberance. The issue highlights the similarities I've seen all year with the lithium equity trading dynamic and how Uncle Sam's taking an equity stake in Lithium Americas is providing a catalyst like Tesla's offtake with Piedmont during Battery Day 5 years ago, which led to an epic lithium bull run for the next 2 years. As with LAC in its early days, RK Equity is both a strategic advisor to and hold equity interests in NOA Lithium. But we are not, of course, financial advisors, and nothing in this video should be considered investment advice. Please do your own research and read the disclaimer at the end of this video. Before we begin, we'd like to thank our two sponsors, Lithium Royalty Corp and USCF Investments. Lithium Royalty Corp, which trades on the Toronto Stock Exchange ticker symbol LIRC, is a lithium-focused royalty company with a diversified portfolio of royalties on mineral properties around the world. USCF Investments is an ETF pioneer for nearly 20 years, with 15 funds providing exposure mostly to commodities futures such as CPER for copper, ZSB for battery metals, USG for gold, and SDCI for a broadly diversified commodity exposure. Matt wrote a blog recently flagging the surprising undervaluation of conventional brine plays in Argentina to more richly valued peers in other geographies or lithium types. We'd encourage all our viewers to visit blogs.rkequity.com to read this and all of Matt's other writings, which he is publishing on a near-weekly basis. Looking at the RK Equity scoreboard at the end of the third quarter, NOA Lithium trades on the Toronto Venture Exchange, ticker symbol NOAL. NOAA's stock price outperformed most lithium equities earlier this year and is up 42% year to date. But as Ganfeng, Pilbara, and Mineral Resources rose 90% over the last 3 months, NOAA has fallen slightly. Current market cap is about $60 million at 37 cents Canadian. NOAA has a tight share register with 24% held by founders and management and 35% held by Clean Elements, an investor group which injected $10 million into NOAA in December at a price of 17 cents. Clean Elements also recently invested $20 million in another Argentine brine developer, Grande Lithium. With that intro out of the way, welcome Gabriel. Matt and Rodney will get into some questioning, and after that, I think it would be good, given what's happening in the market and your long experience at Lithium Americas, Gabriel, we can have a broader kind of small rockstock recap lithium discussion.
Thank you, Howard.
Hey, Gabriel. Congratulations on getting the PEA out. That's really good. Just a few questions for myself, and I'm sure Rodney's going to jump in with a few as well. Can you sort of just tell us a little bit about sort of the outcomes and the parameters you used in the PEA? What were the major takeaways?
Since the very beginning, with the resource that we got approximately 4.7 million tons LCE with an average of 520 milligrams per liter. That since the beginning, we thought that it would be feasible to get 2 trains of 20,000. So this was the basis that we decided to at least analyze with Hatch. That was the company that we engaged to do the PEA. So the the project was designed as 2 trains of 20,000 evaporation, because with the concentration that we got, allow us to go traditional or at least proven technology, minimizing the risk of the development of the project. So basically 2 trains of 20,000. First, once we got the first train, we will start the second expansion with another 20,000. We got a few options that we believe that can be evaluated going forward, and the pre-feasibility. We can evaluate a few options with the DLE, and even we haven't evaluated yet the possibility to do chloride outside and do the carbonation at lower elevation. So we still got a few options that we got time to evaluate during the pre-feasibility, but we believe that this approach of 2 stages minimize the risk of going full for 40,000, minimizing that risk as well.
And what's the sort of CapEx? What's the pre-production CapEx on your first 20,000 tons?
First 20,000, 700 million, 706 to be precise. So it's within, I would say, the lower end of the curve. So we believe that it's very competitive comparing to some of the peers that we evaluated based on operation.
And if you went the lithium chloride route, how much of that CapEx would you be able to cut out, do you think?
Approximately between 30 and 35% may be reduced if we go into the chloride route, and the same way on the OpEx.
Okay. And then the lithium chloride route, you talk about it in a little bit in the PEA, but something to evaluate further down the line at the PFS maybe?
Yeah, it's something that we evaluated at a very high level, but one potential route that may be evaluated in the PFS is one approach, maybe to start with the chloride, start production chloride, and once we start getting a cash flow, with that cash flow, we can build a carbonate plant at lower elevation, and so that minimizes the CapEx that is going to be required at the beginning. That is one approach. The other approach may be to get 2 trains, one chloride and another for carbonate. That is something that we need to evaluate, whether there's going to be a market for chloride or not. This is something that we need to evaluate, but it's something that we really like to evaluate.
Just a question, Gabriel. If you look at the chloride route rather than the carbonate, does that reduce or limit the number of potential offtake partners that you'd have, as opposed to selling, being able to sell carbonate?
Yes, that's why our base case is carbonate. We are not our base case still carbonate. And again, our alternative case of the chloride is something to evaluate. If that will allow us to start production of chloride, selling some in order to start getting some cash flow in order to build the carbonate. And potentially, if there is a market for chloride, we can have the flexibility to produce carbonate and chloride. We still, is something that don't believe yet, but we don't believe that the approach of full 100% chloride is the solution that we need to go. So it's either carbonate or a mix of.
And Gabriel, when you put the initial phase 1 20,000 tons in, is the plan or the broad strokes on the PEA that you will there'll be some infrastructure and so on that will be helpful towards phase 2 that could slightly reduce the CapEx on phase 2?
Yeah, it is not significant. As you saw, the savings between phase 1 and 2 are not significant. We are talking about 700 and 1.3 something billion. So it's not significant, the reduction. But absolutely, the infrastructure, there's some that is already being used for the phase 2, like camp, the facilities, access, so that it's going to be in place for the expansion. So that's going to be, I mean, probably is not going to be significant in terms of cost, but it's going to be significant in terms of time, in terms of schedule, to facilitate the construction of the expansion.
And I wanted to ask earlier, Gabriel, your grade and impurities, is it pretty consistent across the entire project?
No, the north and northeast, we got higher concentration of lithium. Within the salar, the concentration is a little bit lower than in the north. So I would say in the northeast, we got well north of 600 milligrams, while within the salar, we are in the range of 400, between 4 and 500 milligrams. In terms of the ratio of the contaminants, it is the same within the salar and on the north and northeast, but the concentration in the north and northeast is much higher in lithium than within the salar.
And can I just ask, how does the slightly lower concentration impact your sort of operating costs?
No, we are using the average. We are not using the higher concentration. The whole evaluation is based on the average rather than the high concentration. Even though we are starting in the north, we are using the average rather than the highest concentration. So it's not impacting.
So you're blending it all together.
Exactly.
Gabriel, looking at your OpEx costs, where would that roughly put you on the curve?
I would say that right now we are in the middle range, probably mid to middle of the production companies in Argentina. I think that Mineraxar is operating now close to nameplate capacity within that range. So at 6,000, we believe that is a fairly reasonable number to consider. That is a good and competitive number in terms of OpEx.
Okay, so I mean, squarely sort of first or second quartile in the cost curve, the global cost curve. So definitely a low cost asset.
Yeah.
So yeah, how are you thinking about CapEx with regards to getting the project into production? What are the options?
Our idea is to, at one point in time, once we develop the project in a little bit more, or during the next phase, looking for strategics or even an operator. We do believe that to take a company, a project to operation, you need a certain set of skills that a junior company doesn't have. We do believe in that. So we believe that it's going to be necessary a different set of skills, a different set of understanding of the complexity of taking the projects to production, and we are open to that. But we also believe that we would like to take it to PFS first, but we are open to entertain discussions. So hopefully the market is going to be better, but and there's going to be interest for those discussions going forward. There are not many projects undeveloped and with these characteristics.
Yeah, I mean, we talked about the relative dearth of salar brine projects in a previous blog article, and it is, noticeable that there are very few such projects around, certainly that are in independent hands as well.
Yeah.
But Gabriel, fair to say that there'd be quite a lot of skills available in the region, given all the amount of development going on there.
Yeah, there are. I think that there are skills in the region. There are companies that may be willing to get into the region as well. We've been talking to some companies that were interested in discussing once we got the PEA done. So they wanted to see what the opportunities with this project. So we believe that there are opportunities for taking this project into production. It's just a matter of see how this can be materialized.
And in terms of moving forward for the PFS, there's a couple of milestones, a couple of things mentioned in the announcement. Can you just elaborate on what the sort of bigger things are to get covered for the PFS?
Yeah, we need to start. We need to complete our exploration. I mean, going in more detail into our exploration campaign. In terms of pumping wells, we need to drill a few more freshwater wells. We want to drill in the south as well. We believe that we got opportunities to expand resource in the south as well. Besides some lab tests and some potential DLEs opportunities that we want to explore besides the evaporation, that we're going to have this optionality. So those are the things that we wanted to have in place in order to get a more robust PFS with a few options going forward for the DFS.
And the sort of timing you're thinking around getting a PFS out?
Our target is to get it before the end of 2026.
And geographically, what projects are close to your project in the local area?
The closest is Mariana. Ganfex Mariana is the closest. It's less than 20 kilometers away from Rio Grande. That is going to be in production this year. Then the projects in Arizaro that are not in production are all in exploration, are located pretty close. But I would say the closest is Mariana. That is going to be in production pretty soon.
It's interesting, as an interesting transition. Gabriel, you mentioned Mariana. We're going to shift now to kind of just a broader kind of lithium discussion. But before we do that, want to thank again our sponsor, Lithium Royalty Corp, which is another way to play Argentina brines, as they hold a royalty on the Mariana project controlled by Ganfeng, as well as on the Trey Q project, which was formerly NEO Lithium, and is now owned by Zijin Mining. You could follow Lithium Royalty on X at lithium_royalty and visit their website, lithiumroyaltycorp.com. And with that, as we transition now to kind of just talking, broadly about what's happening in the market, I mentioned earlier that Lithium Americas getting an equity investment. There's been a lot of consternation about how the U.S. government may have elbowed their way into the economics. But if you're a shareholder of Lithium Americas, you shouldn't care about being diluted, certainly in the short term. The stock has performed extremely well because now Trump's government has validated they're committed to this project, and this has had a similar. We have talked that just like MP lifted a lot of almost all rare earths companies, both producing and non-producing companies, this Lithium Americas event has lifted the fortunes of a lot of other lithium developers. I'm seeing Ioneer is up to some 50% as we're speaking, but Lithium Argentina, which you worked with, Gabriel, and merged, with Lithium Americas, and then split off. That stock seems to trade with Lithium Americas, but doesn't so much trade, with other, let's say, Argentine brines, which doesn't make sense in a lot of ways, but it makes sense. Global markets are inefficient as it comes to junior mining. How ASX looks at things, how TSX looks at things, how the US looks at things is different, and the US generalist investor is clearly understanding critical minerals assets, and if you're properly the US listed with the US asset, you're getting very significant uplifts. We've seen that as well with the metals company TMC, which is a client of ours. But you more relevantly, and I think I said this earlier, Ganfeng's 90% rise in the third quarter, that has nothing to do with US generalist investors buying that stock. Likewise, Pilbara and Minres, in my opinion. So the fact that those stocks are rising seems to indicate to me they're closest to what's happening in China, right? And equities tend to rise. We've had Chris Robb on the program, YJ Lee. The equities always seem to know, 3-6 months ahead. Rodney, you're always saying this as well. So why is Ganfeng and Pilbara and Minres rising 90%, in the last quarter? When lithium prices are, they had a good rally in July and August, small rally, but, have been kind of flat, throughout September. What are your thoughts, Matt, Rodney, and Gabriel? If you have any, thoughts as well, chime in on that, because I think it's telling us something interesting. And, it's always the big cap producers that move first, right? And then they could move down, into some of the smaller names. So I'm wondering if that may happen, looking at both the China-focused stocks, and Lithium Argentina, could NOA, could Galan, and some other Argentine brines, start getting some love.
Well, I'll come in and talk maybe a little bit about the elephant in the room. I mean, I think there's a reason why the Aussie stocks tend to move ahead of the North American stocks, and that's that the Aussie brokers are generally up on lithium and the North American brokers are generally down on lithium. And I think that is a sort of key consideration. As you said, yes, the Australian spodcom producers are much closer to China. And in this cycle, the US or the stocks with US operations have moved very substantially off the Trump administration's buy into Lithium Americas and the potential to open up into those areas. But certainly the North American listed stocks are struggling against the wave of negative broker reports on lithium, the commodity. And, I'm not going to say that, okay, I'll come out and say it. Those brokers were wrong in the last upcycle. I mean, they were, for the most part, they were bearish according to most of the whole of the last upcycle. And obviously they were bearish as we moved into the down cycle as well. But the big question is, are they missing it again if we move into a lithium price upcycle? So I think it's going to be very interesting over the next 6 to 12 months to see whether those bearish North American brokers are making the right call, or whether, again, they're making the wrong call.
You're right, Matt. North America has always been much more negative lithium. However, there was a huge rush in 2016, under Macri in Argentina. That's, I think, around the time that I met Gabriel. Like, Argentine brines were all the rage, right? And if you look at, and we've talked about this from an M&A perspective, there's probably been more M&A in Argentine brine assets than any other type, and at very substantial, valuations generally, and 10 times the value of where you're seeing NOAA, or Galan for a conventional high grade large brine. I mean, think about it. Rio Tinto bought Rincon, which was large but low grade with high impurities requiring DLE for $825 million, right, a few years ago. And I think NEOL Lithium was bought for like $770 million, and Millennial Lithium was bought by LAC for like $400 million. So why it doesn't make sense? It's a market disconnect. It's a market inefficiency, in my opinion. There's lots of projects out there. There's lots of, obviously, sediment project, a large sediment project, has attracted, billions of dollars. But from a capital intensity point of view, I think that was like $75,000 per ton, or something like that. The Thacker Pass project, compared to, what'd you say, Gabriel, what it was here, 30,000 a ton?
Yep.
Is that, yeah, there's a 30,000 a ton. So it's conventional, half the value, half the, and so I've been surprised that Lithium Argentina is trading largely at replacement value at 700 million market cap. You couldn't construct half of their project, plus, the Cachari-Olaroz project, which is, 40,000 tons. So it's nice to see Lithium Argentina running. But again, it seems to be trading in sympathy with Lithium Americas, which sort of makes sense. But to the extent that the market appreciates the value in Lithium Argentina, I think they should turn their attention to yourself, as well as Galan Lithium. And this was the bet that if you talk, Gabriel, about maybe your major shareholder, Clean Elements, a little bit, because they wrote a check into Galan, $20 million. I've referenced them in prior interviews that it's nice to see a contrarian family office out of Israel scoured the world, said they see all the demand that we all see, and they don't understand why it's so hated, and made this $30 million bet. They didn't bet on clay, they didn't bet on hard rock, in any jurisdiction. They didn't bet on DLE. They decided to buy 2 high grade brines in Argentina. So yeah, we've had Ofer on the program very shortly, but if you want to say anything, Gabriel, about
I think
their
that
involvement.
I think that they saw the opportunity. I mean, they started looking for opportunities middle of last year. Their first investment was with NOAA, and the closing was December last year, when nobody wants to get into lithium. I think, as you well said, they are contrarians. Galan was the same, was right before the price started to rise again. But I believe that, as Matt well said in his article, brines are well undervalued in comparison with other projects. And And this is a main point. And one of the reasons that I see is that most of the brine projects are traded in the Canadian market. That are probably one of the reasons that are undervalued, because the Australian market mm, probably understand a little bit more lithium than the Canadian market. Probably that's one of the reasons that we got Brine's project at lower levels than in Australia. Uh, I don't know.
I mean, I think the other thing that strikes me about the brine projects as opposed to the hard rock is that, with brines, you're going all the way through, or most of them, you're going all the way through to lithium carbonate, which is the end product. Whereas with spot cotton, you're making an intermediate product, which then has to be further purified in a converter. So again, you are sort of sitting there scratching your head and wondering why the brine projects are being so undervalued by the market, because it just doesn't seem justified, um, you know, to get that sort of valuation.
Yeah.
And Gabriel, could you compare, I guess, Argentina today under Milei to Argentina under Macri or Fernandez? I mean, is the environment better or worse? I
I
mean, there have
think
been yeah, go ahead.
no. I think for investment point of view, in general terms, I think it's better. Um, I mean, the RIGI is a good example. Um, this regime for large investments, it's a good promotion for investment in Argentina. There are several companies already that already applied and got the projects approved for this, and it's a good tool for making companies to make investments in Argentina. I mean, the fact that, and besides lithium, the fact that we got BHP back in Argentina or investing in Argentina, it's a good indicator that Argentina is back in the world scenario for mining. I mean, BHP is, I mean, the one thing is investments in lithium, and it's completely different um, game. Copper, the investments are much higher. So the fact that we got PHP, we got now Glencore that applied for RIGI for 2 projects or 3 projects for 13 billion. So it's significant, the investments that are planned for copper. So I would say the scenario is very positive. Mining, oil and gas, the same thing. So I think this is very positive, the investment scenario in Argentina right now.
Okay, that's appreciate that color. I sense that. We have seen Trump and Scott Bessent giving their full-throated endorsement to Argentina, but why was that full-throated endorsement needed? Like, what's happened in the last couple of weeks that suddenly it's in the news again?
My personal opinion is pretty much political, and that's why this endorsement needs also some actions on the local side. I mean, Milei needs to do a few things at the local level in terms of consensus at the local level, in terms of political consensus. There's a lot of, I mean, he doesn't have a lot of support at the Congress, and this middle term election is critical for the next 2 years, and this endorsement is very important to support the next 2 years going forward. The election is now at the end of October, and this is going to be important to get more support at the Congress and to support the reforms that are coming in terms of tax reforms, labor. So there is a lot of still to be done. And again, the work has just started.
Right. Okay. So Argentina has been a volatile place politically over the years. Markets don't like uncertainty. I guess there is an upcoming election. So, as we saw, I think with Lithium Americas, again, going back to that, maybe Lithium Americas making a final investment decision in April, the stock barely moved because there was uncertainty as to the loan. But as soon as you remove the uncertainty with certainty, you then have this rally. So maybe there's some political uncertainty embedded in some of the Argentine, brine assets. I just like to close. I don't know, just to put you on the spot, Matt or Rodney, I don't know what I was asked last week, about the September 30th deadline in China, about the 7 lepidolite mines. There was articles that talked about 2 of them, passing their reserve requirements, but there was no talk, about the other 5. So, the market seemed to think, okay, they could just switch back on, but, maybe we're not hearing from those other 5, and there are other hoops that need to be gone through in order to kind of get some of those mines back into production. I guess that's the main thing overhanging the supply side in lithium is what's happening in China with these 7 lepidolite mines. Do you have any fresh color?
Well, it was my understanding that only one mine was shut down, which is the CATL mine. The other mines are operating as normal. So there's no near term really major concern about it. And in addition, it was the CATL mine which its license ran out at the end of September. The other mines have got longer term licenses, so I don't think it's such a big issue in terms of getting the reserve reporting turned around. In addition, the other mines are slightly smaller or somewhat smaller than the CATL operation. So my understanding or certainly my feeling is that the market's sort of getting itself into a little bit of a state about something that's not particularly important. It's just a question of dotting the I's and crossing the T's. That's going to be done in the background, probably over the next sort of 3, 4, 5 months or so. I would imagine those mines will continue to operate in the meantime.
Okay. In terms of lithium price or inventories, I know you're tracking those very closely. Is there any updated color?
There's been a little bit of a fall in inventories over the last sort of 4 to 6 weeks or so, but we're still looking at sort of around about 35, 40 days of supply of inventories. We're past that period when we tend to see the cathode restocking cycle into the fourth quarter now. So I'm not really expecting amazing sort of demand growth out of China in the next sort of 3 or 4 months or so until after the Chinese New Year. After the Chinese New Year is generally when we sort of start to see a stronger restocking event. So limited fundamental support, I think, probably in the next few months.
Okay. Thanks for that, Matt. I'm going to see you and Gabriel in London next month for the 121 conference. I think it's the 17th, the 19th. If any of our viewers are in London, I'd encourage you to come to the 121 event. We'll flash this up here, and to feel free to reach out to me or to Matt if you want to have a chat.
Or to Gabriel.
Or to Gabriel, of course. And if you want any information about NOA Lithium Brines, you can go to their website, but also you could reach out to us directly at rockstockchannel@rkequity.com. And with that, thanks very much, Gabriel.
Thank
Great
you.
seeing you as always. And congratulations on a very robust, conventional PEA and a market environment that keep it simple, stupid. Argentine conventional brines.
Thank you, Howard. Thank you, Matt. Rodney.
Cheers.
Good to see you.